In this video, I wanted to talk about Alibaba and Alibaba's stock. The company announced their earnings early today, and the stock is up more than 11% as I speak. Why is the stock going up so fast? And is this a long term trend that I expect in the stock? That's what I want to talk about. I'm going to take a look at Alibaba, evaluate the company, research the company, value the stock based on future free cash flows I expect, value the company based on future profits, earnings per share I expect, and then compare it to its current stock price. I'll take a look at the strategy that Alibaba has, and I'll share my assessment as to how strong that strategy is and if they're likely to be successful or struggle. Overall, Alibaba reminds me of Amazon, except they're in China, servicing China as well as surrounding countries, as well as doing business directly with other countries like the US and in Europe. They've been very successful. Their model is very partnership oriented with merchants that go on their e commerce platform. They also have a very strong cloud business that is growing tremendously by 26% in the earnings they just announced, which is the principal reason why the stock is flourishing. AI spend is really high, and Alibaba is capitalizing on that type of demand coming out of Asia. They also are really focusing on the core businesses that they want to keep. They decided to spin off a part of Alibaba. And as we go through their sales, I'm going to point out how this spinoff, if you compared the financials fairly, what they had last year versus what they would have this year, the business is actually growing by 10%, which is very good. They're also buying back shares in pretty sizable amounts. They have a lot of cash on the balance sheet, so they're doing that. So a lot of things are coming together for Alibaba. And I'm principally a US investor. I reside here in the US, and most of my stocks are here in the United States. But I really like owning Alibaba because it gives me exposure to what I consider one of the most important technology companies in Asia and one of the most important technology companies, e commerce companies in the world. Let me go through their earnings announcement, point out some important facts, then I'll look at their fundamentals, value the company, and then conclude with my plan whether I'm going to buy more shares of Alibaba, sell my shares in Alibaba, or just hold. Let's get into it. Alibaba has become a $298 billion market cap company, and it has revenues of $139 billion. So investors are paying a little over 2 times revenue for the company. That's a very good ratio. It shows a discounted stock price using that metric. P ratio is very rational at 15, forward P 14. We're in a time where these desirable businesses have PEs of 35, 45. And here we have a stock that is at a 15. And again, this is, in my book, a very desirable business, growing and in a region that has a very good growth rate if you look at GDP. Analysts like the stock and they think it's discounted. It's a buy with a discount. This stock has done terrific, clearly beating the S&P. It's up 57% year to date. Over the 1 year, it's up 67%. So this has been a winner all day long. It pays a small dividend as well. Here is where I'd like to explain a few things about their growth rate. So they divested a part of the business. And if you look at the new company, the new business, they only grew 2%. If they would have kept that business unit, they would have grown at 10%. So in my mind, they've been this quarter, I should say, I would see it as a 10% growth rate quarter. More importantly, where are they growing? They're growing fastest in the most important part of Alibaba, which is the cloud infrastructure business. It grew by 26%. That's much more valuable than them growing their e-commerce business. E-commerce business is a lower margin, less strategic. The cloud infrastructure business, very strategic around AI and has better margins and has really has a fertile future. So Being the leader in Asia for cloud infrastructure would make Alibaba incredibly valuable. Moving along, the company had good cash flow. They've resumed very favorable cash flow. They've invested a lot in their business, especially around the data center where they've invested a lot of money. And their gross margins are expanding. Great to see. That's another reason why the stock is flourishing. If you have expanding gross margins, again, that cloud business is getting bigger, better margins, and it's making the company more profitable. Just really good things out of their financials and out of their earnings. Analysts cover Alibaba, 10 analysts. They all have favorable opinions on Alibaba, and they think that the stock is discounted by 20%. That's including today's rise of more than 11%. When we look at their forecast, it's expected they're going to continue to grow. This is a big company. When we look at their revenue in US dollars, we're in the fiscal year that will end in 2026, March 31st, 2026. And that number, if we converted it to US dollars, would be roughly about 150 billion. So we're dealing with a big company, not a small company. 8% growth on that type of business amount is a big number, well over $12 billion of dollars being added to the top line. Earnings per share, again, this is in the Chinese currency. So this is, I'll convert it when I do my valuation. And the earnings per share is going to grow faster than revenue, bringing down the PE to a very low rate. This is a growing technology e-commerce business in a region that is got more addressable market to go than Amazon has in the US, because Amazon's already pretty much become the dominant player in e-commerce in the US. There's little addressable market left. In Asia, it's a different story. I really like the remaining addressable market that's out there, as well as the growth in the cloud infrastructure business. So I really like that low PE and feel like it's an opportunity within this stock. Today's earnings encouraged me to change and update my valuation of Alibaba. And I calculate that the stock is discounted by 32%. What that means is I believe each share is worth $197 per share. The stock is being sold to investors for $133. That's a compelling discount. And I'm a buyer of additional shares of Alibaba. I have been buying into this stock. I've been sharing that information with members of my channel and sharing why I've been bullish on Alibaba. My optimism continues and actually has increased. The cloud infrastructure business is very strategic. They are going to become the leader within China of cloud infrastructure. That's going to make them very, very valuable. They're already extremely valuable. But I would say that this stock could head toward a $1 trillion valuation in a couple of years. When we look at cash flows are terrific, and the future free cash flows look great. And the company's stock is priced 22% below the intrinsic value that I calculate on free cash flows. When we look at earnings per share, that's even better. The earnings per share, the profitability of Alibaba, if I measure those earnings per share numbers in the future, establish a net present value today, I see that the stock is discounted by 46%. So I'm going to buy additional shares of Alibaba and continue to build an already large position in this strategic company.